Good afternoon, everyone. BC Richfield here, coming to you live from London. Apologies for being a few minutes late. We had some technical issues, but we are here with you all on a new link. So we'll give people a little bit of time to come through. I think the recent action on Bitcoin and risk assets has caught everybody off guard, including the world's streaming software studios. So I think it might just be a little bit of a case that it's a bit overwhelmed. But for those of you that are here, a really, really, really big welcome. Hopefully you can see me okay, or, well, you can see the charts. I'll save you from my face, but you can see the charts and hopefully hear me. Good morning, Prince. How are we doing? So a big shout out to all of you that have made it across on this link. Hopefully the others find the new link and we will look to crack on. But what a great and exciting week that we've had so far. So had a lot of questions coming in, trying to be a little bit more active on Twitter. I know it's not really my strong suit. You know, running an international trading desk is pretty full-time occupation, but it is always a pleasure to be here with you guys. We try and squeeze it in before we look to the New York pre-market open, which is in an hour and a half. So from here, what are we going to do? We're going to take a look at Bitcoin, all right? XRP prediction, bruv. Love that. There's a little bit of a London twinge on there that I can relate to. I am on it, bruv. Right, XRP, that's it. So we're going to take chart requests today. What I want to do is I want to share with you a couple of different bits and pieces, right? One, how did we see this coming? Two, how did we prepare for it? Three, is there a crystal ball? There's no crystal ball, right? You're overlaying a series of macroeconomic data. You're aligning that with risk markets. You're looking for certain catalysts within those markets. You're combining those with news, geopolitical events, and key fundamental drivers, which we're then overlaying with technical elements to try and find entries and exits. We can go back, we can look at the chart. In fact, the chart that's up at the moment, we'll go through this shortly, but this was from the report back here, which we can see was released on Sunday evening. I have the pleasure of writing that daily report. Members get a new report every single day from one of the trading team, and quite simply it close above these two boxes, which I'll explain to you very soon what they are. And we see this as almost a deviation, a sign of strength. And this is where we belong from. So it's paid really, really, really good dividends. The only frustration was yesterday, intraday trading the NASDAQ with members at the bird nest, looking for those pumps, and price was just moving. You could see the volume, the volatility, really lifting price. We didn't manage to get any intraday entries, but thankfully the team managed to get out some fantastic long positions. And also we'd recently increased our spot bags along with members. And I want to run through with you the reasons for us doing that. So happy St. George's Day as well. How silly of me. I did put a little post out about that this morning. I am a very proud Englishman. I'm not proud of what England has become. I'm very proud of what we have, our cultural heritage, a wonderful country, a multicultural country that unfortunately has lost its way in recent times, like a lot of the majorly kind of developed countries. But a hugely happy St. George's Day to you, Real Burnside, as well as all of our other fellow Brits that are looking to celebrate that across the world. Now, what do we want to look at? Well, I want to just give you a very quick update. I know, again, and I say this every stream, that I say this to you guys, I know this isn't the sexy part of trading, right? But this is the part that helps us all position to be part of this pump. So we can see why it has importance, why I take this time every week or twice a week to go through this with you all right? Morning, Seb. How you doing, mate? Apologies if you got the wrong link. We're back up and running now. So Wednesday, 23rd of April. What are we looking at today? Well, focused on the US markets, which we can see down here. So 1:35 p.m. This is UTC. So this is a couple of hours from now, just over, right? We've got FOMC member Waller speaking now. Whenever an FOMC member speaks, obviously the most weight is put onto Powell, but whenever one of the FOMC members speak, their tone is so very important. For example, if they're a little bit concerned that risk markets popping off, which they are aggressively at the moment, you know, the S&P 500, the NASDAQ, equity markets absolutely firing, technology stocks pumping, cryptocurrency absolutely going through the roof. Why is that a concern for the Fed? Well, it's probably going to drive inflation up, right? So if they think that this is a really, really bad thing for everything they've been trying to achieve, which is bringing inflation down, getting interest rates down, making sure the economy in the US is healthier, then, you know, if they want to quash that, then, you know, when the Fed come out and the members speak, they can be very, very hawkish, right? So think of hawkish and dovish. The terminology is basically like, you know, bearish and bullish. Dovish being bullish, hawkish being bearish. They come out and say that they have really strong concerns about the market and about inflation coming back and about this pump. Then they might say things like, oh, we're going to look to, you know, we might not be making any more cuts this year, or maybe we're going to have to review the cuts we were planning to make now because we have fears of inflation. Maybe growth figures aren't as good as they expected them to be, and they're now looking to recalculate. Stuff like that we need to be careful of. Flowfus, yeah, completely agree. So what Flowfus is saying here, they need to start printing. Typically, quantitative easing measures or the money printers coming on will happen when the US needs to refinance its debt, right? So they need to refinance, I believe, about $6 or $7 trillion this quarter. But to do that, they're going to need to look at the bond markets. They're going to be using the central bank to buy back treasuries, right, to buy back government debt. And they want the bond yield to be as low as possible when they buy that back. Otherwise, it puts them in a position that they struggle to service their own debt, all right? And we are going to cover that very briefly in a moment, but it's a good point there from Flo. By the way, guys, if you do have any charts you want me to take a look at, we'll happily do some live charting here. Already had XRP put forward. We will, of course, take a look at Ethereum as well. As a few others. Solana, I think a lot of people are interested in what's coming in the Solana front as well. So anyway, just to finish this off, we've got Waller speaking, 135 these times the UTC, 145 we've got Flash Manufacturing PMI and Flash Services PMI as well. All right, now these are seen a lot more of a kind of health check on the economy. You know, is America as strong as it needs to be to deal with what the current GDP is, what inflation currently is, interest rates? There are so many economic factors. But anyway, we're just looking at a snapshot of these and we're saying, is this a healthy environment for risk to thrive? We're in a very news and fundamentally driven market at the moment, and what we've seen really, I think, link into this really kind of expensive pump is Trump obviously coming out now as well, saying that, you know, that he's going to take a more relaxed stance to the China tariffs. I mean, when you look back, hindsight is a wonderful thing, right? But you realize most of the time you're just getting fucked with, right, by powers that are above and beyond your control, and even above and beyond the control of the biggest funds in the world, right? When you have an American president who in one tweet can completely change the flow of the stock market, we need to factor that in, and you need to understand what the most important catalysts and drivers are in that market. And that's what we're here to help kind of dissect. Can't wait for XRP to flip BTC again. I'll be less poor. I think a lot of people will be less poor for sure. I hate you here. Hello, mate. Good to have you on with us. So, excuse me, let's get ourselves back to Bitcoin, right? We're going to start with this. No, yeah, we are. We're going to start with Bitcoin, then we're going to look at bonds quickly, and look at what the S&P 500 are doing and risk markets, and then we're going to dive in for all of our wonderful degens into the alt market. Now, I've left this on here. It's, yeah, I suppose it probably is a little bit showy. It's not here to kind of say, oh, I told you so, blah, blah, blah. It's here to highlight how important it is to just have a plan, right? So I think my exact statement was when I released the Bitcoin report here, whilst we hold below these two here, at the time, that was a bearish gap. All right, these gaps are called with the failure of order pairing. So what we're looking for here is those inefficiencies are often then refilled. What I look at these inefficiencies as, so this gap here, for example, this gap here. So when we're within this gap, if we close above this gap, this bearish gap here, when we see displacement shifting structure or ideally breaking structure, case in point, this gap here, right, which we'll come back to in a second, then what I'm looking at this is I'm saying, well, this bearish gap here, just to use this just as an example, right? This bearish gap here and this bullish gap here, right? What were their jobs? Well, when you see displacement to the downside, when these inefficiencies, look to get rebalanced by the market, you expect rejection here and continuation, right? This is giving sellers the opportunity to join the party again. So they've missed the big drop, price returns to these gaps. If the sellers really want to step in here, that's where they can fill their bags. If they don't, price typically closes through these gaps. It's a sign that price in this case is going to move higher, right? This here, this inversion gap, was the sign that we displaced to the upside. This is where buyers can get involved. You can see the reaction here. Then when price closes through, we expect this to offer rejection. So when we've got this inversion gap, which we're looking as resistance, and a bearish gap that's looking at resistance, our expectation is for price to do this, right? This is why you never marry your bias, right? People come in, and I saw a brilliant post from a good friend of mine, a wonderful trader, Follis, this morning that encapsulated it perfectly, talking about marrying bias, talking about all these damn reply guys that you get in tweets and stuff like that, like, oh, bruv, you were bullish a few days ago, and now you're bearish. It's like, yeah, it's not a long-term view, mate. The markets do change, they flex, and there's dynamics that need to be appreciated. And at the end of the day, what do I want to do? I was bearish here. I was looking for shorts when we got into this area, down into the key liquidity pools lower. My conditions were, if we close above this gap, inverting it, then my first trader to these highs, then the mother bar higher here, because we were in a daily inside bar pattern. If anybody wants to know more about that, you can find it pinned to the top of my Twitter profile. Then what is this? This is going to be one of two things when it happens, and I'll always think of SC's voice in my head. This is either a deviation, in which case we then step back in the range and we expect to trade it lower, or you get a breakout with momentum, and that's what this gap symbolizes, in which case this is the area that we look to climb on board for longs. What if we're wrong? What if we go long here and the market does that and closes below? No problem, because then we see that as resistance that we then look to trade it lower, okay? So this is what it's about in terms of having multiple plans that you can take to the chart. Trading is not about being right. It's about understanding market dynamics, being able to understand when you're wrong, being able to flip very quickly. Think of it as almost paying the market for data, I'm saying, okay, market, my idea is, as we just did, obviously just deleted this, my idea is this, because we've now closed below these, my system tells me this is resistance, meaning that I'm now looking to get short here and trade to lower liquidity pools, right? So if that's invalidated, I can either keep trying to short this market and just get absolutely wrecked, or I can appreciate that my 1R loss, if I've taken it here, was the price that I've paid, or maybe it's a 2R loss, maybe you lost 2 trades, right? Maybe that's the price here that I'm paying to get the information I need. So that didn't happen. So I pay 1R, 2R to the market to do what? To step into a position here when I've then basically paid my dues. The market showed me its hand by closing above this, and then allows me to get into a multiple compound R position higher, right? So I just wanted to go through that because I had a lot of people contacting me recently. We've had a lot of engagement with members, which has been wonderful. We've had members making, not just a lot of money, a lot of successful trades, right? It's not, the industry really isn't about money. If you can't grow a $100 account into a $200 account, you're never going to grow $1 million to 2 million or 10 million to 20 million, right? It just doesn't work like that. Don't worry about the returns right now. Worry about mastering something, or you mastering. I don't think you ever master something, even in the 10,000 hour rule, but working every single day to drive yourself to be the very best that you can be, so that you can use this to either top up, your current income, your current job, or you can pivot into the industry completely. Anyway, that's it. Kind of mini ran over. I never kind of show this stuff really. I don't really look for kudos and bits and pieces, but what's really important to me is, when I was talking about price getting back above here and then this rallying, people were saying, oh, okay, but you were short here. People, when I was looking to short here, were telling me I need to be more bullish. Other people are telling me I need to be bearish. Look, you do you, other people will do them. The key thing is having a system that you can follow that's consistent, that makes you profitable over time. All right. So we're going to overlay this, with the altcoin market as well. But something we want to do here, just to ignore, these little bits. In fact, I might have even, no, I wasn't quite smart enough to save this all as a total group. There's going to be some bits and pieces on there, but let's get rid of those for a moment and just look at our targeting. Where are we heading? Well, on a weekly scale, we've got an internal kind of high here. Yeah. Now, on a weekly scale, that is something that's worth noting. Okay, any high or low, any key liquidity pool, and what happens when price gets there at the moment seems to be heading there like a rocket ship. All right. What will happen here is where we've kind of just recently, well, we don't know yet until the close of week, but if price does close above here, these relative equal highs, for example, this just being a swing high, then looking for this area to offer support, right? So when price comes above this here, closes up here, if we do pull back to this is an area I want to see hold, and that is 88,748. So moving this down onto a daily, we can then look to build another plan around that. We want to mark our key liquidity. Really, really like this. This is why I wouldn't be looking to enter any long positions at the moment. This is really, really key for me because we've got a key liquidity pool over here. Why? Because it's a swing high, it led to a large sell-off, and it's also a high that rebalanced this inefficiency. So another reason for it to be a really good liquidity pool. Why? Because when price sold off aggressively here, it left these gaps. Price then drew to these gaps. Remember what we were talking about earlier, it gives sellers the opportunity to step in. So now if we look at this as an area, right, that's what's capping price, yeah? So price getting above these, again, inverting this gap, closing above this high, tells me then on a more intraday basis, we can look for runs up to the weekly level here. But the reason I wouldn't be looking to actively long at the moment is because we're so close to this. And this is obviously a key area of resistance as well. Even if we just take local here and you focus on the wicks, yeah, something like that, for example. Right, and then we can look left across here as well and say, okay, does this have any confluence? Actually, a larger area if you look to kind of include this up until this key wick here. Why? And you can probably move this just a smidge lower here as well. So why am I making it like this? Well, because key resistance, price came above, deviation got above, big pump, support, big pump, support, lost it, retested as resistance. So now this area combined with this high show me the key level that I want price to break through. On a daily scale, if you're on that level, bearing in mind that what's quite interesting about this actually is what's that 94,728, sorry. So as we're looking at this here, currently in a point of resistance doesn't mean this thing can't rip, but it does mean that the opportunities typically, if you have missed this pump, are going to come. If we close and we leave this gap down here, you look for these pullbacks. Ideally, this high is intact, and then basically looking to stage this level to level as we go through, right? Looking for these potential areas of resistance to turn to support, all right? That's the playbook that I'm looking for there on Bitcoin, right? So let me just run you through this very quickly as well. What do we use as our gauge, basically, our correlated or counter-correlated assets that we're looking to gauge the risk sentiment of the market? For example, gold, right? What's been happening with gold? Well, gold is a massive has been on a massive tear, yeah, obvious as you can see with here, and for a long time. Why has it really been on a massive tear? Gold is a huge safe haven in any risk-off environment, all right, you often see a move across into bonds, you see a move across into defensive stocks. Bonds depends on the yields, right, obviously, but yields typically go up in a risk-off environment, encouraging people to buy government debt. When the yields are going down and they're less attractive, then people can speculate a bit more, and there's a need to push more towards risk markets, right? Because to get those returns that they need to, first of all, beat inflation, and secondly, give people returns on their investment. The real burn side, I think ETH trades back into one-day inversion gap with a line with last week's high and breakout level. Awesome. Let's take a look at that when we slide onto ETH in a moment. So look, with gold really, really hot, this is always a good exercise, or I think it is anyway. Let's overlay Bitcoin. And let's overlay the NASDAQ as well. All right, or actually what I've done there is I've just dumped onto that rather than adding it. Hang on. Right, so here we go. Now, this is all going to look a little bit squiggly, so make it as large as we can, right? Now, what we can see here is this is Bitcoin in red, yeah, and this in purple is the NASDAQ. Now, you can see that these are relatively correlated, yeah? Let me just change this to a line chart very quickly, and we'll just do this one. There we go. Let's move these down a thickness so that they just look a little bit cleaner. There we go, right? So as we see this here, we can see quite clearly that we can see the correlation with Bitcoin and the NASDAQ, why, you know, both risk assets, or NASDAQ is a risk basket, heavily laden towards technology stocks. And here we can see the price of gold, right? So we can see here, obviously the correlation isn't always there. We had this, you know, period here where gold was going up along with Bitcoin and along with the S&P 500, right? But we see here, right, Bitcoin just had this absolute breakaway, yeah? the NASDAQ and the S&P 500 as well, both, you know, correlated asset classes. Is grinding up here where we saw this explosive move. Now, you can see how we had this downturn here on gold. Now, things did stabilize through here. We saw this choppy period for risk markets above as gold continued to grind up. But then look at this point here, right? Look at this key kind of area where you just see this massive mess. As basically what happens here, it's almost like a moving average crossover. You can see, yeah, risk off moving up and risk on moving down quite aggressively. Okay, so you can see and go and study these correlations of what time periods are they strong, when are they weak, when don't they matter, when do they matter. Study that across history, okay, because this is just one of a few different measures that we're using to gauge risk markets. So I'm always asking myself, are we risk on, are we risk off? Do we have the environment that we need to thrive in, right? So typically what you want to see is a falling dollar. We can see that we've had that in spades. However, it's been very difficult to use this as a gauge for risk because there's very different drivers behind it. So understanding the economic drivers behind it, the fact that the US want a lower dollar, which sounds mad, but it isn't, because they really struggle with trade if it's not. They also want to drive the dollar down. They want the bond markets lower because as they're refinancing their debt, it ultimately helps them do so. So the DXY is down. We can see we've got our ranges here. We're actually, I need to dig this out on the chart, but we're down in our lower range here, which the reason that I've taken the lower range off the chart is because it wasn't relevant until back in 22. Yeah, 22. So we'll add that back on, but basically we're just looking at these key areas, right? Price holding below here, when it gets back above, tends to rip. Closed below here, drop straight to the next level, held there momentarily, let me zoom in, drop back below, and then it's selling off again. So we've got a weak dollar. That's good for risk, but we need to be careful because of the economic drivers behind it. We want to see a low volatility index back down below 30, right? Ideally back down below 20, but we've seen this here with the VIX, right? In fact, on the live show back here, look, Monday, 31st of March, when we came back above the 20 here, we're saying to people live on air, and there's a friend of ours through the Bird Nest as well, one of our members called Jojo, who's wonderful with traditional markets, and we were having that conversation with her. We say, look, this is the time that we need to be a little bit cautious here. And again, you know, don't take my word for it. Just look at this on here and go to yourself, all right, well, how does Bitcoin perform? Understand the correlation, right? This time we've got Bitcoin in red, yeah, but look, Volatility index dropping, gets back down below 20. Yeah, so dropping here, we see the progress in Bitcoin's price. But then look at this here. Look at that big pump here when it got below 20. Excuse me. Then we see it starting to rise. Bitcoin's price starts to fall. VIX rising, Bitcoin price falling. VIX rising, Bitcoin price falling, etc. Now look at what we've seen here. In these spikes, price dropping off, nice spike to the high. Then when it started to fall back here, look how it just stabilized, right? Nice. So price going up. The pump here did not crash this. It didn't set a lower low. What about this pump here? Actually, we saw the price of Bitcoin going up with that pump. And again, you can just see the super normal strength that it's showing. But ultimately, the VIX being back down here between the 30 and 20 range is really where we want to see it. Right, let me just get rid of this. One more, and then I promise you we'll climb into all the altcoin charts. So do let me know in the chat if you've got any you want me to take a look at. The next thing we want to see as our risk measure is we want to see prosperous risk markets. We've been long on the NASDAQ, we've been long on ES. So the NQ contract is just a mini contract, the ES contract is the mini contract of the S&P 500, and the YM is the mini contract of the Dow Jones. These three are correlated, and look at them. They're pumping, so we expect good times for Bitcoin. The dollar's down, and then we look at the bond markets, and this is the really interesting one because, oh, let me lock that in, because what we can see here, extend these across a little bit, is the US wants, and we're using the 10-year Treasury yield here as a kind of guide, all right? But what the US want when they're going to refinance is they want, you know, the yields to be down around here, because look, if you were about to refinance any amount of money, right, then even if you thought about it as $100, just to make the maths easy, they're refinancing, I think, about $6 to $7 trillion, right, the fiscal deficit. So they want that to be as low as possible, because basically they're selling that debt to domestic and foreign investors, right? You can go and buy treasuries, right? Anybody can. So when you do that, you're buying the US government debt, which is the safest debt that you can buy, I believe AA rated or AAA. Again, not my area of expertise, so I don't want to speak on that too much. I listen to much smarter people than I in that respect. It's not my area of specialty, but it's a very, very, very safe debt versus, let's say, for example, a really turbulent country like, say, for example, even on a really, really developed scale, one of my favorite countries, somewhere like South Africa, will, have to offer more in order to sell their debt because there's a higher risk of default. Okay, same with Britain, for example, so with the UK, same with other European countries, etc., where someone like Switzerland, for example, obviously is very, very, very safe debt to buy. So what you're saying is, imagine you're a major fund, or even with your own investment portfolio, right? So as we're looking here, we're saying, okay, if you want to buy that debt, they're going to pay you 4.309% on your yield. Yeah, that's your yearly interest that you earn for holding those bonds. Yeah. Well, if the US have to pay you 4.3% now, yeah, and they have to pay to do that on, say, $7 trillion worth of debt, then they're going to pay a lot more back in interest than if they can get the markets, which they've done quite successfully down here. If they can get the markets, if they can get the bond yield to do this, and they can refinance that debt down in the 3% range, yeah, 0.5%, 1%, etc., is a lot, especially when you're talking about trillions of dollars. So that's why we watch the bond markets. Bond markets are pulling back. We now currently have a really nice environment for risk. But now comes the next part of that equation, which is where we have to find the technical levels to get involved, because it's no point just buying now after these massive pumps only to get taken out on a massive retrace, when we can look to highlight those areas. Maybe we don't get them. Sometimes crypto runs too hot and we just can't get involved. But we have to highlight those areas because we want to be involved at key areas that give us the best risk to reward. All right. Evil Gemini, Bernd, how you doing, my friend? Isn't the move to Bitcoin not more driven by the lack of trust in the dollar? Yeah, it absolutely can be. I mean, look, Bitcoin's technically a currency, but it's not. It still trades like a risk asset, but it is technically a currency. Look, I think you typically, if there's a lack of faith in the dollar, or not a lack of faith in the dollar, people are buying dollars historically as the world's reserve currency. People are buying dollars as a hedge against risk, or as a kind of risk-off safe haven. That's not the case as to why the dollar's dropping at the moment, really. Okay, yes, there's all the turbulence. There's the mass effect of Trump, his tariffs. There's an argument that he's been putting forward, the tone and rhetoric that he has, in order to get people to start, selling dollars or not buying them, and ultimately bringing the price of the dollar down as there's weakness seen in the economy, for example, as well, which will drive the dollar down. I don't think Bitcoin's quite there yet, but I do think it's a really great volatile risk asset that, funds and that can sell at a great premium. So there's money to be made all over the shop. The key thing is they have to know there's at least some kind of stability here for that risk bid to be on. And we've started to see the convergence now of, those risk on factors that underpin the fact that the risk bid now is a sensible one. We've also seen structural changes in terms of market structure, right, and technical indicators that also tell us that it's there. I was on Crypto Town Hall with Follis and a few other really amazing people actually last week. TX West Capital was on there as well. There's some brilliant guys who are on there on a really, really regular basis, super, super bright. And we were having these discussions then, and I was saying the reasons why I was along, and Follis was saying this isn't the time to get long for him. Yeah, he's really looking for that market structure break, which I completely agree with. My positions are much more speculative because I'm looking to build intraday positions into swings. And this is kind of that big move that everybody's been looking for, right? This is the market structure break. This is, that big drive above. This is that impulse move now with price really starting to fire off. And we're seeing this across a lot. But it doesn't mean that I want to be buying here. If this is just slamming into resistance, I want it to be a speculator down here. Don't want to be a speculator up here. I either want to get confirmation, start to see these levels reclaimed, because look, here, let's imagine we've had this move, or we have this move here. The problem that I've got here is if I want to go long here, and this is a very binary example, you wouldn't enter this trade, so please do stay out of my tweets telling me that I'm an idiot and stuff like that, right? But this is a very kind of bold and crass example, really, but it is true. Your last swing point was down here. So if you wanted to be long on a higher time frame scale, you're basically saying, okay, if I'm right, I've got, this amount of bandwidth and return. However, if I'm wrong, realistically, to manage that risk, I can only be wrong below here because price could retrace to this gap here. It could retest this consolidation before going back up again. So the risk to reward isn't really there, is it, right? However, if we wait for the retest, we retrace down back into this kind of area here, and you say, okay, again, not saying we'd look exactly like this, but all of a sudden you've look, much, much better risk to reward. Or you're waiting for things like this and you say, okay, well, now we've broken above this. I can mitigate because I've got a low that sat here below a key support level. If this was the liquidity sweep that's led to the pump, I don't see why price would need to come back for it again. If it did and then came back above again, you have extra confirmation. But all of a sudden you can see the difference. And I'll just move this across just so that we can see the differences. It's all about your risk profile here, right? Sure, you can long here and it might work and it might rip, but ultimately, the old adage of let's not long into resistance and let's not short support is key. However, you can see by data, if you look into it enough, the amount of people that were shorting down here was astronomical, as was the amount of people that were longing up in these regions here. It's just the nature of the markets, right? If that was you, just simply learn from it. And typically, trading is often designed to make you feel uncomfortable. Everyone thought this was going to zero here. Best traders are buying this up here, knowing, as we've been talking about for a long time, that if it did go lower, then you've got orders set lower down that you're happy to buy based on key levels, like I've been highlighting for quite a while, this whole area here, right? Really, I was looking for price to come into this, consolidation here, right? Resistance, 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 price breaks above, don't ever get the retest, just flies away. So, if this is going to hold, this was a great place to buy, but we didn't get it. Where we were buying, however, was in the consolidation here, and we were buyers here and we were buyers here, adding to the spot bags. That's fine. You get the pumps, you're now involved, and you've done so knowing that you're kind of dollar cost averaging if you go lower. Trading is very different, right? You're holding typically leveraged positions and you've got funding rates, you've got carryover costs, etc. to factor in. So that's where we are with that. Let's take a look at ETH anyway. And remember, guys, if you do have anything you want me to take a look at, just pop it in there. We're going to do XRP next and then Solana. Right, so lots of squiggles here to be involved in on ETH. So I'm still not as convinced by ETH, although I do think naturally it will get picked up. But go and watch the previous shows. Close below this area here, chasing out these lows. Happy to be a buyer at this consolidation that held the market here and led to these pumps. As I said before, I was a buyer of more Ethereum here, right? I was a buyer when we swept out this low. We got this beautiful reaction here only to get retraced. I was a buyer here again, right? And I think if we look a few weeks ago on the show, and I said when we got this close back in here, that's when I added quite a lot of ETH, which is fine, just a dollar cost average. Like I said, it's not a genius move. You're just look at the chart, zoom the hell out, look at these consolidations that lead to big pumps, try and find the origin of the ones that led to the biggest pumps. If those buyers were there then, and they considered ETH value there to the point that it was such an aggressive pump, chances are there's people that consider it value there again, all right? Now, anyway, moving down to a daily, looking for confirmation here, and just forgive all this mess, I will. We'll look at that on the 4 hour. I wanted to leave it there because I always like it. I always like to just be honest with you guys, right? If these are my thoughts, I don't want to manipulate these charts. I don't want to change them. I only ever use these charts for these live shows, right? So on the daily, I said until we close above this gap here, I'm still not really convinced by ETH. And what else did I say? This line here on the retest, expect it to offer a rejection. If we get above it, look for the retest to long it. We swept out this here. Technically, actually, it should have been this low, in truth. Tom or Dante is without doubt would turn in his, well, he's not dead thankfully, but he would be dropping a lot of C-bombs if he saw me do that. So for me, that's why I was monitoring as the key low. This was the last swing low before price broke down. For anybody that doesn't know, Tom Dante is, in my opinion, probably one of the very best traders of our generation that's out there. I learned so much from him many years ago, and traders like SZ and that as well, some of the very best price action traders, in my opinion, in the world. But look, taking this here, that was the wick. So buyers stepped in here, then price absolutely obliterated them. When price returns to this point, especially after time spent, yeah, as it returns to here, we look for a rejection here initially. So you're looking for how price engages. If it closes above here, and you know this was a big expensive candle, then you know I'm either looking to short this on the first retrace, in which case I'm wrong. Then when we close above it, I'm long here, yeah, because look, this gives the people that were wrong here, the buyers that were wrong, the chance to mitigate their position if they've held this drawdown. If that is then they step back in and they're looking to back that bid still, or they're thinking, well, I'm not actually going to close that position here because now this is looking quite good and I don't think the market's going down, then they can step in even more. Join us, Hugger Bear. How we doing, mate? And Avanza, yeah, sorry, mate, I'd missed that. We can certainly take a look at Sui as well. Good day to you too, my friend. Still waiting for you to fill the 3K. Yeah, the CME gap as well. That's a really good point. So if you're looking at but anyway, look, I know we've got a little bit to cover. Unfortunately, I need to cover this early, but join us, Hugger Bear here made a brilliant point. If you go and look at the CME chart, we do have the CME gap as well, right? So go and check that out, but also go and check and kind of study how price responds at CME gaps. We do the very same thing with Bitcoin as well. Yeah, apologies, mate. We'll take a look at that, or maybe I'll put a Twitter post out for people later, but I've got an event that I need to be to shortly. So unfortunately, we're going to have to wrap this up in probably the next few minutes or so. And I want to get through these charts. So ETH, quite simply, close above this here, invert this now, then there's a lot of support below as far as I'm concerned. We will create a bullish gap here. So I really wouldn't, you know, as long as we close above here, I still think those dips are for buying. If we come back below, refill that gap, you know, people will be naturally hesitant because they've been getting absolutely spanked left, right, and center. So, you know, like we had with this move here, price goes above, we're looking for that to offer support. It didn't happen. It came back below. So what do we do? Shorted the living daylights out of it. And the same thing here. If we violated this and came back below this, then I would be looking for lower. But it really does feel like things are aligning on many fronts to underpin the risk bid at the moment. So to just decant this down a little bit lower for you, you can see, and I know I sound like a broken record with these, but these inversion gaps are such a key part to how I trade. I always just try and be honest with you about that. You look for those liquidity sweeps. Actually, it swept there a little bit earlier, but I think, let's have a look. Did we get equal lows down there as well, right? So this was a really interesting point because we took liquidity here, but look how we failed to close below it. However, I did expect this low to get taken out. Instead, we've seen this quite a lot from ETH. It leaves this failure swing here, leaving these key equal lows as a draw on liquidity. So again, while this gap was bearish, I would look for price to move to this gap and reject. So let's say I was wrong, I've lost 1R. However, when we close above, now it's an inversion gap. I know I can trade it to at least this high and other liquidity targets, which we'd already had marked out. Not that one, because that had already been swept, But this one here, which came from the daily, and this internal high here, they acted as a beautiful draw, and really you just don't have to get out of these positions here, okay? Now, this has been a very, very inefficient and fast run up, right? So if I was looking to get involved in this now, I'm either looking at this level to act as support and for us to move higher, all right? Let me just go and move that up, something like this. Yeah, price drawing back down, holding support here. I don't mind if it dips below, but has to recover it, and then we move higher. We could even move down as low as this. If the momentum is where it is, a really nice place would be here. Why? Because we've got this high, remember, untapped high, that was the high before price broke out. We then have this gap formed here as well. Great liquidity pool, great place for price to show its strength and for buyers to step in here. So I'd be looking for that area to get involved, to be long on a swing basis, right? Obviously have added plenty of spot lower, so I won't be looking to add anything to that. So now let's take a look at XRP. So weekly, no, again, wasn't really much. We didn't have any displacement to write home about. We had obviously started to trend downwards, lower lows, lower highs, and we were respecting bearish order blocks as well. We still are, in fact. However, if we get a weekly close above this down close candle, that would be a really nice area of support. So let's move these across, because most of our TA has been done here on the daily and the 4 hour. So what were we looking for here? We're looking for this level to hold, which we got. We highlighted our lower liquidity target should we break down, which we didn't. Price holding this level was definitely a sign of strength. We can see what our premise was here. Last low, pre-break, retest, price sold off. Back above this level, look how it then becomes support. Just one simple line. Why? Because key support level. Overlay your double or triple screen system here. Don't just be trading it off of one time frame, right? What happened? Price came in and found key support here, key support here, key support here, right? This low, when it came in and price pumped, we either look for that to get swept and for price to pump. Why? Well, look what happened. This was support last time, but price did pump, then it revisited, then it came back above. So we know, we don't know, but we can say that the higher probability trade is to the upside, right? So this happened here as well, right? Price came in, but it closed below, retested it as resistance and sold off. So we know this is a key level in the same way this one is. If price had got underneath this, if we closed underneath, we would have looked for the retest on that and to short it down to the next level of liquidity. We held it, we closed above this, so longs are good for here. Or, as we said before, when we close above this key SR level, yeah. Why? Because price had a large expansion above it here. Support, 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 support. Broke down, little bit of a test of resistance. Now it's back above, and we can see the reaction the price got in here that has led to the pump. Actually, on this, the 4 hour, I think, was the really, really key one here, because we got this lovely inversion here of these two gaps. We got this gap inversion here, which was the first signal when we held this, that price was going to look to move higher. And then we got this gap inversion here, which was a little bit less kind because the expansion was so aggressive on Tuesday afternoon. If you weren't already involved, very difficult to then be. But then look, again, just if we just even use the idea here that we're talking about with these highs and lows, right there, right, close above, look for this area to hold, move up. Then again, you're looking for these key highs and lows, right? The equal highs here, rejection, price closes above, we expect continuation, right? Now we're at the next point here where we've seen price close above this now. So again, just want to kind of see this area hold, right? If we then look back across the line, you say to yourself, does this have any other confluence as an area? You can just kind of draw these lines back. Typically, these will work better as a box, but even as a line, and I'll just highlight that so you can see it a bit clearer. Yeah, look at the engagement with these levels. At support, support, close below, resistance, close above, support, close below, resistance, resistance, close above, support, 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 close below, resistance, 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 close above, support, up we go, deviation, close above, support, right? Here, close below, resistance. So we can see why these levels make a lot of sense. So when you're picking these out, you can always move these back. Now, I do typically draw these more as a box than a line, right? So for me, it would be something probably a little bit more like this. But ultimately, we're always just looking for these key areas, right? Just to see where the buyers and sellers are exchanging. So for me here on XRP, this is a pretty beautiful spot, actually. I really like this here. So as long as we hold above this, I think, there's a lot of progress to be made up into these highs. There's so much untapped liquidity here. And this is the key higher time frame level up here to expand to. Like I think Jonas Agabert was saying, the 3K ETH gap as well is around this level. So going to be really, really interesting to see how that one plays out. So let's just take a very quick look at Solana. Haven't been on Sol for a little while actually here. Still trying to find some of my underwater meme bags, right? So again, why were we buying Sol here? Why was I buying Sol here? I was buying it here, bought it back here again because of this consolidation before this lovely pump. And then when we had that, price hasn't closed back below this. Yeah, hasn't closed back below this. So we're looking at this lovely hold all the way through here. The daily starts to paint a bit of a clearer picture. We've still got all the squiggles on, so apologies for the mess. I do like a clean chart, but I like to leave, like I said, the annotations on here. So we make sure that we're accountable, or I'm accountable. So I was looking for this. Obviously, we got the rejection price, did hold back down into here. That's where it was indicating of buying more Solana. When price closed below here, yeah, and we retested this, I was feeling like Sol would move a little bit lower down, all right, probably into these kind of consolidation areas here in the early 90s. But we very quickly reclaimed this, right? We changed the narrative because once again, we had this inversion gap. You can find this on my Twitter. I said, look, taking some cautious long positions here purely because we had that inversion. Then we set the order block and price never gave us a reason to step away. Look, on here, I think we were talking about this recently, just saying this is a key area. Close above this, take out the liquidity from these highs. Look how it was used again as support. I know it sounds like a broken record. This gap then became the inversion. Should have updated this, really, shouldn't I? And then close above, holding here. So we're long. Now look again, this was the key high we were targeting. We've closed above, we're now using it as support. And on a daily scale, I really love the fact that we've got these equal highs running across here, which are a brilliant test. Burn, see you later, mate. Great input as always and great to see you. So yeah, I just, it's bullish. We close the daily here, we create a bullish gap down here. We look for price to dip into that, we move higher. If we leave that gap and we invert that, then watch out for this order block because we have been moving up pretty strongly, as well as this inversion gap, which should offer support. Close below these here, and I think we move back to flush out these lows. But at the moment, it's relatively difficult to see that. 4 hours holding a beautiful structure here. We can see the retests of these levels, price sweeping out liquidity, inducing those shorts, getting back above it, and then having a good old rip. In these cases, if you're not seeing any clear and obvious gaps, right, then you can watch for your order blocks, all right, or look for these down close candles. We closed above, and look at this. Perfect rejection, perfect close, bullish pin bar candle with a short nose. That's where you want to be. That's where you want to be involved, all right? Because you've got key liquidity in here that's untapped, so you can expect expansion into this. And if you're wrong and it goes the other way, you just reconsider, start closing below this bullish gap here and look for this series of lows to get attacked because that's where the key liquidity is resting. So let's finish up on SUI. So here we are on SUI. These are definitely be blue. So this was just a key pivot point or SR, support, 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 resistance, deviation, price closed beneath, resistance, price sells off. Again, from the similar area, surprised we didn't run into this, but we didn't. Now we've closed above, bullish, right? So once again, looking for these key highs, really like the look of this one here. Want to see price close above this, hold this area as support. Again, if we come back below, not the end of the world, we set this gap. We look for price to draw into this and move higher. In terms of more aggressive plays, this is looking like a nice potential retrace here. If I'm just looking at the expansion leg higher, which I'll focus on, probably this here, this consolidation, this was the low that set the original pump. So it'd be that, or you could take the exact expansion leg, which would be here. Either way, I love this support area here, which is covered by this gap, because it would give us a nice 50% fib retracement. If I really wanted Dreamtown, I would be buying in here. Yeah, and again, if we took a zoom in version of that, I would then be on a lower time frame looking for a pattern like this. Yeah, to get involved as a buyer. Why? Because we can see, let's say, for example, this level that we're looking at here, that black line is the Fibonacci golden pocket here. Yeah, we engage with that. So we've swept a key level. We've swept local liquidity. We've had a structure break. This is where I can be a buyer. This is where I know I'm wrong. Yeah. So buyer, wrong below here, chasing higher targets. All right, legends, I hope that's been insightful for you anyway. Around about 3,000 of you live today, even though technical issues meant we had to change the link, which is a real blessing. Thank you to each and every one of you for tuning in and listening to me ramble on. I've been BC Richfield. You can find me on Twitter. Please do reach out. And actually, yeah, give me a follow. Look, I'm trying to get myself up, but never really one to haul myself out for this, but I am going to ask, trying to get myself a few more followers at the moment. I'm about 45 away from 10,000. So that would be a really nice milestone for me. So if you do like the content, please do come and give us a follow. You can find everything that I do, that we do over at the Bird Nest with our wonderful talisman Crypto Bird, as well as our great community of members, education calls. We've got one of the best trading teams around, who have been one of the most profitable teams in the space, who I have the pleasure of being head of trading there. And I can honestly tell you that the trading team are just exceptional. Whether you're looking for intraday plays, swings, positions, wonderful FA team that we've got over there. Come and check it out. And we've also got tons of free content that goes out onto YouTube, Twitter all the time, as well as our website. So please do come and connect. All right. So also, for anybody, this is my last public live show, but anybody that's going to be out in Token, I will be out there for Token in Dubai, right? So do hit me up. Let me know where you are. We'll be doing a lot of the VIP events. I think we're doing some keynotes, certainly going to be involved with our friends there over at OKX. So I'll be hosting a panel, I think, or being part of a wonderful panel over there with them at their event. There's some amazing stuff kicking off over there. I absolutely love Dubai, love the people, love the vibe that we get in Token. That and Token in Singapore for me are still those two massive standout events. So hope to see you there and have a fantastic week ahead. Remember, trade smart. Don't get involved in the FOMO. Find your levels, find the key areas you want to be involved, and always manage your risk. Okay, have a fantastic week ahead, everyone. I look forward to catching you all around the nest.